You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, welcome back to This Week in Futures Options. I love that funky tune. It gets me in the mood for the funkiest of product categories, which you can certainly say is on the futures options side of the fence. This week in particular, my name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding Options Insider Radio Network, in addition to, of course, all of your favorite archived episodes of TWIFO. This Week in Futures Options, where we break down all of the amazing all the amazing trading activity in the world of futures options. So gold, crude oil, soybeans, treasuries, what have you, we break it all down. In addition to that, we added, speaking of funky, one of the funkier additions to the network a couple days ago, the business show, a.k.a. the BS, as the cool kids are calling it. And it is exactly as it sounds, a bit of a silly take on the world of business news. So check it out if you are so inclined. If you want something a little bit different after listening to our 14 programs of hardcore options content, something a little bit different, maybe to tweak your funny bone, well, try that out. It's kind of interesting. I'll just leave it at that, and you can check it out for yourself. Of course, you can find all of that wherever you find your favorite Options Insider Radio Network programs, including, of course, the mothership, the flagship, theoptionsinsider.com. Click on the Insider Radio Network tab, and your journey has begun. Of course, you're also off via iTunes or TuneIn or Stitcher or Google Play Podcasts or all the legions of podcast providers out there now as well. So no shortage of ways for you guys to get a hold of the shows, whichever one you're interested in, or maybe all of the above. And then while you're listening, while you're streaming, while you're doing whatever it is you're doing, make sure you send in your questions. We love to hear from you guys. You guys are kind of the reason we do this. So we'd love to hear from you guys. Oh, I forgot to mention we are also streaming live. We try to stream live every Friday, 3 p.m. Central, 4 p.m. Eastern. That said, I'll be traveling, as will Mr. Nick next week. So we'll see. We'll have a show. Whether or not it'll be able to be live is a bit of a question, so we'll see. So maybe put a pin on the live for next week. But we are doing it live this week to keep you guys out there happy. And speaking of Mr. Nick, he is joining me on the show today, of course, Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we like to call around here, Quick Strike. I think Nick likes to call it that as well. Nick, welcome back to the TWIFO program, sir.
All right, good to be back. Look, I'm excited to get going again.
I am excited to get going again as well. So let's do just that. Let's kick it off, Nick. It was an interesting week to watch from an overall activity perspective. We had a lot of things kind of on the radar this week. You know, we have, of course, we had the craziness that was FOMC, or at least anticipation of FOMC coming in the middle of the week. Of course, as predicted by most of the Fed funds products, and you can go look at it yourself over there, our friends at CME and their FedWatch tool, they were predicting a pretty low probability of any sort of rate increase in June, and we saw pretty much as expected. They sat on their hands this past Wednesday, and going forward, the probabilities are not much higher for much throughout the rest of the year. July, about a 7%, according to the Fed funds, about less than a third, about 29% for SEP. November, still less than a third, about 31%, and you have to go all the way out to December to get right around a coin flip, about 47%. So it's market not really pricing in much till the end of the year at this point, if not really into early 2016. And a lot of that, of course, due to the fact that, you know, the Fed is just clearly bifurcated on this issue. There's the one camp that seems to be just crazy zeroing in on inflation, and they kind of view this sub 5% labor market we have right now in terms of unemployment as somehow inflationary, even though it hasn't really materialized in any real fashion in the marketplace. And yet the other camp obviously seeing the rest of the world kind of going to negative rates, actually, and all the other impacts around the world is obviously probably putting the brakes on global growth, and that'll probably feed back into the U.S. We don't live in a vacuum, after all. It is a global economic system. And so that camp saying, yeah, that's going to probably put the brakes on it for us. We probably don't have to do it ourselves. Clearly that camp winning out, even though Miss Yellen and her team still popping their heads up all the time with a lot more, perhaps more often than they should be given. I mean, look at this, Nick. We've had pretty much it's been since at least Q3 of last year. So you're talking many, many months now of structurally higher volatility in the marketplace as a result of what they've been doing, and just a lot more, particularly earlier in the year, a lot of back and forth in the market, a lot of it being very much Fed-driven. And all for what? All for a handful of basis point rate increase we got, towards the end of last year. That's pretty much it.
Yep, that's it. You know, I believe that you're going to see this whole opinion change from their standpoint as the numbers come out, right? So I think we talked about it a little bit last week, where typically the May numbers get revised all the time, and we haven't seen those revisions quite yet. We'll see them in a few weeks or a couple weeks, whatever. I think it's 2 weeks, no, probably 3 weeks from today, since that'll be the first of the month, so they won't have the Fed. They won't have the non-farm on that first Friday of the month. Or at least they didn't when I was down there. So as much as this is telling us nothing's going to happen right now, I think what you're going to see is that it's going to change. You know, if anything happens, even from the fact that, you know, Brexit, there's all kinds of opinions on that. So if something changes there, if that happens or doesn't happen and the market doesn't react, or it does react, you can see the Fed change its stance as early as next week, if people start talking after that finally takes place on the 23rd. So I'm, if you look at the market, and we'll talk a little bit about the Eurodollars when we get to that. If you look at the market, there's the general sense is that not much is going to happen on the downside, but it remains to be seen, right? As we know, these guys can change their opinion, and they've changed their opinion every time the numbers come out. They change their opinion every time a world event happens, which is what they're supposed to do, I imagine. But at the same time, I think it's good for trade, right? Because if they think it's going up, they think it's going down, that makes volatility, and I think it's going to be good for everybody that's watching those.
Yeah, speaking of watching, I know there's been a lot of play in the Treasuries and all the other rates-related products as a result of the Fed rearing their ugly head, or perhaps choosing not to, earlier this week. We saw interesting action across kind of the spectrum of the different Treasury products. Obviously, going to be a little bit closer to home, closer to the front portion of the curve, because that's where the action was. They're not going to be playing, many, many years out for a rate decision this week. So we saw, but still, interesting pops in volume and open interest, about 20% increase in open interest On the 2 years, the volume, again, as you'd expect, about 3/4 right towards that front month portion of the curve there. That's pretty much everybody playing in July. 5-year open interest up even higher, nearly 40%. Big moves in out there as well. 10-year open interest up about nearly a third, 29% there. So interesting movements across the board. And Nick, I know you want to dive into Eurodollar, so let's do that as well. But let's also, if you have some thoughts on some particular activity that caught your eye, and then across the Treasury spectrum, then I know you're an old school Eurodollar guy, so you got to get your Eurodollar love. And in particular, I think we may have perhaps our crazy trade of the week candidate, sir.
Yeah, it looks like there was quite a bit of activity, and as we've mentioned, and as you just mentioned, as the Fed gets into the decision-making process, you're going to see a great deal of the trade take place in this front part of the curve. And again, as a reminder, we're calling it that's the whites. It's the first year, right? It's the first 4 quarterlies plus whatever cereals are trading on the from an option standpoint. So right now, I think there's 8 contracts trading. There's 2 cereals on each of the two front months, and then 2 more quarterly. So lots of big trade out there. 5% increase in open interest doesn't seem like a lot, but it's over 1 million contracts open interest there, and just in the first year, and we'll throw the first 3 reds in there just for the sake of that means the second year of the curve. Over 4 million contracts traded this week. So a lot of activity, a lot of back and forth. As you mentioned, there was probably a good candidate for crazy trade of the week. But before we get to that crazy trade of the week, let's talk about the crazy trade of the week from last week, which was the SEP 17 and D17 par calls. They traded about 36,000 each, I think I remember, or 36,000 total, about 18,000 each. And we talked about it, and it was trading at 4 and 4.5 ticks. So just really juicy for some par calls out there. And again, it all relates back to the fact that the whole world is going towards zero or towards negative rates. So somebody out there is hedging their bets. However, what we saw this week a little bit, we saw some June 17 par contracts trade. Not a big change in the open interest there. So what you might have seen is some people covering their, if they had some short Junes, they might have been covering those against those SEP and those Ds, or even people saying, you know what, if there's going to be takers in this par call, I'll sell even the June 17. So you just never know. The one thing that I did notice that doesn't really come across on the report so much. Again, I'm looking at the TWIFO report as we're doing the talk. So there is that information there.
Oh, wait, I forgot to plug the URL again this week, so I should make it out there.
Yeah, go ahead and do it.
CMEgroup.com/TWIO, TWIO. Make sure you don't put caps in there. Make sure it's case sensitive for some interesting reason. So yeah, lowercase TWIO. That'll get you to the exact report that Nick and I are actually looking at right now, and you guys can follow along, and certainly on demand after the fact. You guys can play along as well with the update. It's going to update every week with all the numbers back daily out there, so you're going to be able to see the updated numbers as it's going up. Pretty cool stuff. So if you guys are listening live right now, you can see exactly what Nick and I are talking about, and next week, of course, you can see the updated numbers for all the action today. Good stuff. Go ahead, Nick.
Right. Yeah. So, and as a reminder, there is a data display settings button on there, and you can go back and look at last week and the week prior as well. So you can always go and review what we were discussing if you happen to listen to any old podcasts, or if you just want to see what happened a week ago or 2 weeks ago. So back on the par calls, there was some closing on the December par call. So there was a 40,000 decrease in open interest. So that could very well be somebody who's covering against the better sales they had in the stupids from last week. And again, a stupid is when you sell 2 of the same type of option. So last week was a SEP 17 contract, 2017 contract, par call, or 100 strike stupids that traded about 36,000 times. So there was some closings on the D16. So that to me would seem that somebody is saying, okay, I got some better shorts out there a bit. I'm going to cover these shorts I have in December and just make sure everything's in a good place for me from a position standpoint. So moving on to what could potentially be seen. And again, we're calling it the crazy trade. whether it's a stupid trade, even though it might be named a stupid again this week, we don't quite know. But so this week,
all stupids are stupid, Nick.
All stupid. Yeah, I know you're not a big stupid fan, but today was actually, or this week was actually a stupid, which means a double stupid, at least from what I can tell on the prints that are showing out there. So there was a September-December 95.6 1x2 call spread stupid. So basically in September, they bought I believe paper bought the 95. And again, one thing I wanted to point out as sort of a little Eurodollar information, when we say 95 strike, we really mean 99.50. So in the Eurodollars, you take the two middle numbers, and that's how they generally quote the strikes. So it's the 99.50, 99.65, or we call it the 95.96 1x2. So that 1x2 traded in September and December, and I believe paper bought one and sold two, and they did it as a stupid, so both in the SEP and the DEES contract. And then on top of it, they bought the October 95.96 or 95.50, 99.50, 99.625 call spread as a stupid. So they did the 1x2 stupid plus another call spread. So basically we had a call spread stupid that took place, and that traded about 85,000 times, and that was the crux of the boost in open interest that we saw in all of those calls. So there was almost a doubling of the open interest in the December 99.65 contract, and then in fact across the board all those were multiple hundreds of thousands of dollars increase, hundreds of thousands increase in open interest. So a lot of times when paper comes in and does that 1x2, they'll start thinking about targeting a particular part of the curve. So in that case, 99.50, that's basically 0.5%, and 99.65, that's 0.3%. So they're thinking that maybe rates in the SEP-DEES part of the year are going to be between 0.5% and 0.3%. So a lot of times you'll see those trades take place. So that's clearly paper coming in to initiate that. And I'd call that a fairly crazy trade because I'm sure that there's plenty to trade around that and to spread that out and to butterfly it out and that type of thing. So that was the big one that we saw this week. And just as an FYI in the Eurodollars, in the whites mostly, you had 1 million change in OI for the calls and almost 1 million change in the OI for the puts. So just a massive amount of trading in the Eurodollars. And I say it all the time. It's easy to trade. The numbers are easy. It all makes sense. It's all in decimals. There's a lot going on there. So it's something to take a look at.
Let's just hit that again in case listeners missed it. That's what could beat that for our crazy trade of the week. You got not just a stupid, you got a ratio stupid. So a 1x2 ratio stupid on the 95.96, and then just as a kicker, you can call it a plus, I guess, a kicker, whatever you want. They got an extra vertical on there, an extra just straight up call spread. I can't remember the number of times I've seen that we see stupids, ratio stupids like this very rarely, let alone for this kind of size, let alone with the extra kicker to boot. Again, that kind of goes back to reinforce the notion that if you want funky paper, Eurodollars are certainly the place to look. And I think we're reinforcing it 2 weeks in a row now, Nick. Our crazy trade of the week. I'm voting for this. Maybe you have something else in reserve. I'm voting for this.
I think this is pretty good. And if memory suits me, a lot of times they'll throw in this, this October 95.6 call spread. That's probably one bid in the pit. So I'm sure they threw that in as the kicker for them to be able to get the stupids done. At least that's my guess. I didn't talk to anybody down there this week, but that's my guess just based on what they've done in the past. So yeah, this one's going to win, I think, just because for the sheer magnitude. I like it for the sheer magnitude. It's at least 85,000 of them traded. I like it for the fact that there was a lot of openings in the strikes. I like it because it also it's a targeted trade. It's kind of saying, hey, paper thinks this might be the range for the near term. And as you mentioned in the beginning of the show, not much is going to happen, even if the numbers change significantly over the next several weeks after Brexit and the next non-farm and that type of thing. They're probably going to sit on their hands for a little while. So we're going to get past a few of these expirations, but there's definitely some targeting of the interest rate market here, and paper's kind of showing this is what they think is going to happen.
Speaking of what paper's thinking is going to happen, we've been looking at a lot of numbers. The hot polling right now is certainly looking beyond FOMC and even the rates to the realm of all things Brexit. I think the level of structural vol that's still existing in the marketplace as we're recording this and streaming it live here on Friday, 3 p.m. Central, a little bit after. Volatility still relatively high out there in the broad equity markets. VIX cash around a 19.5 or so level. So it's still clearly people are concerned and were far more concerned coming in the beginning of the week about Brexit than they were about Miss Yellen and her crew. A lot of the polls are still looking to swing toward Europe, Britain, perhaps pulling out of the Eurozone with all of the intended consequences. As I won't bore you, Nick, with the various minutiae. I've been doing some research into this. I think we have this kind of notion here that, on June 23rd is the vote, 24th they're out of the Eurozone, and away we go. And that's not how it's going to work. There's all sorts of debate. It's going to be years of debate afterwards about exactly what format that withdrawal will take place in, whether it's a different Swiss model, WTO model, et cetera, all kinds of nonsense. But what we have seen is kind of interesting. Our people are lining up to express a little bit of concern, shall we say, out there as a result of Brexit, particularly as you might imagine in the old pound USD. We saw a huge amount of action out there from a put perspective out there, just pretty much a lion's share of the action out there. Lion's share of the action actually also very much close to home in the AUG front month kind of expiration cycle there. Again, not surprisingly, that's what encompasses the actual Brexit vote. So if you're going to play, you're concerned about downside, you're probably going to be playing there. Again, and also seeing vol slightly up, but more interestingly enough, we really saw, again, a lot of action to the puts. So the 1.32 strike put leading the charge, over 2,000, about 2,300 contracts out there this week. What's interesting, though, more so even than the vol trade up, is the skew. That 50 delta risk reversal, your 25 delta call, 25 delta put is getting pretty hefty out there. Again, indicating that the interest, the concern is really to the downside, and also those puts leading the charge out there. Also kind of indicating that it's a put love festival out there, and we're probably going to be seeing that at least for a little while, Nick, until at least the near term vol from this vote shakes itself out of the marketplace.
Yeah, it makes sense. But, like we talked about last week, and like you, I've been trying to go out there and learn a little bit about what's happening with the Brexit, what exactly it means. And I know you tweeted a good article this morning. I read that one. I had read another one prior. And you mentioned it could be till 2020 before this thing takes place. And what I did not realize is that even if the vote goes to exit, it's not binding. So they can negotiate and figure things out prior to that and stay in, and it's just a recommendation from the population. So the government doesn't necessarily have to follow that. So there's a lot that can go on. I think it's opening a lot of eyes, obviously. And I think you're going to see, just like you could very well see a UK that has exactly the same terms under their participation in the EU as they would if they exited. That could be the whole deal that gets reworked, as you mentioned earlier. So as much as this may, pop, this bubble might pop again next week when the vote finally comes out, we're not going to know the answers anytime soon in terms of what exactly is going to happen. Now, and because of that, and with that said, and because this skew is still really, it's come back a little bit this week, mostly in the further out stuff. But there's opportunity here. If you don't want to pay premium, if you don't want to pay a outsized premium for those puts, you can get in and play the potential break by getting in on those calls and hedging them. You got really cheap calls in comparison to the puts right now. So there is some trading opportunity from that standpoint. And again, we'll mention, I know we talked about it a little bit last week as well, the front weekly expires on the 24th. So you're going to be able to trade like a day or a day and a half, probably a day option or almost a binary option as this news comes out. So it's 6B4M6 is the 6B4M6 is the symbol for week 4 front weekly option. So a lot of stuff out there. That's like trading a cheap way to trade the direction without having to get into the futures and potentially getting in trouble.
Yeah, if you're looking obviously to load up on some puts ahead of the announcement, you might be a little bit behind the curve there. But I think that is an interesting point that they will effectively be binaries right around the day of the vote. So that should make it perhaps a little bit more attractive. We'll see a lot of that premium have come out. So if you want to trade that straight up daily at that point, that AKA essentially a binary, that may be an interesting way to play. If you're not concerned about the lead up, you just want the actual event itself. You don't have to worry about all the premium that's kind of baked into it. Now, not all of it's going to be out until the event, obviously, but should be a wee bit cheaper, which may be of interest to you. Turning our attention to the other side of this coin, the euro. The euro actually hasn't taken perhaps the drubbing and certainly isn't expressing the same type of concerns from a volatility and a skew perspective that we're seeing in the pound, Nick, which is kind of interesting. A lot of people thought, obviously, I think the pound would take the lion's share of the shellacking, but you think maybe euro take a wee bit of a hit too. After all, losing one potentially, that eurozone potentially losing one of its, major drivers. Obviously, they're not in the euro, but still, that does accrete back to the currency. And so we're seeing a decent spike in open interest, about nearly 20% this week. Again, a lot of that volume, the lion's share, over half. In the front portion of the curve. Again, it's all pretty much Brexit driven, not a heck of a lot going on much beyond that. But it was interesting enough, though, is that the skew, unlike the pound, we're not seeing a really hefty bias one way or the other, Nick, which that kind of interested me. I thought we would see some sort of bias going into this on the euro, maybe somewhere along the lines of what we're seeing in the pound. But at least so far, that hasn't really materialized. Is that your takeaway as well?
Yeah, it is kind of interesting. You see it getting a little bit more negative, meaning more bid to the puts a little bit this week, not a great deal. But the interesting number here that I take away from the report is that the put-call ratios are still all very biased, both on the volume this week as well as the open interest are all biased toward the put side. So basically it looks like there are buyers of the puts, but there are also sellers there as well. So you never know what that's against. It could very well be against another currency or whatever. Buying the pound and selling the euro currency is a possibility, but not as much bid in the skew like you mentioned, but still more activity on the put side in both the intraday stuff as well as the general open interest. So again, we could see this change as we go into next week. But at the same time, there's all kinds of things to remember, right? I mean, I'm learning more as we get asked questions about this and as we have more conversations about this. It's the one of 28 countries in the Eurozone. Other people have wanted to leave, Spain and Greece, right? Nobody really cares if they left so much because they're not the financial hub that the UK is out there. But, there's still a lot to go on. And I think these negotiations, negotiations could very well be going on now to say, we're going to give you whatever we want regardless of what happens. And the one thing we didn't mention, we had the one official, she got shot this week and she was for staying in the union, and the gentleman that attacked her was for leaving. So, and they suspended polling for the Brexit entirely. So, that could be a little bit more sobering view for them over there as well, saying, what are we going to have a loss of life over the vote for something like this? So, next week it'll be sort of telling. I'm really, you mentioned it just previously as part of the pound discussion. I'm really looking forward to see what volatility does next week, just as you get down to that 3 days, 2 days, 1 day. I want to see how much volatility value is available in those 1 day options, because there's going to be opportunity both ways there, both from a premium buyer and a premium seller standpoint.
Yeah, it is a little bit, reprehensible to have, this level of violence over effectively a non-binding vote. You kind of have to wonder what, of course, clearly a deranged individual, but still it is a little bit disconcerting and, in some ways maybe getting a little bit of what he wants by delaying the vote. So, yeah, interesting stuff unfolding. Speaking of interesting stuff, we can probably talk nothing but Brexit and FOMC this week, but we probably should mention Nick, just because it refuses to go away. Just the endless stream of activity, volatility. I mean, if it was no Brexit and no FOMC right now, we'd clearly be leading with soybeans yet again. Who would have imagined when we conceptualized the show a few months back, Nick, that we'd hit on soybeans pretty much every episode, even more so than crude? Would you ever have imagined that?
No, not at all. And I never would have imagined knowing as much about beans now as I do, or being as informed as I am about beans in terms of all the things we've been talking about, the old crop and the new crop, the different levels they've had, the volatility over the years, the the trends in the underlying, the fundamentals versus the technicals. So, but it has been fun, and I think just as a general conversation point, it's a good thing to watch and it's a good thing to discuss because again, it's another market for people to pay attention and find some activity in the trade. I mean, there's lots of stuff going on there this week. We recovered quite a bit. We were down quite a bit up until this morning or last night and this morning. So we recovered over half of what we were down. I think we recovered, let me see, today's change up 12. Yeah, so I think we got about half. Oh, that's corn. Let me see what we got here. We recovered about, we did about 60% retracement back on the loss that we had. So that's going to be interesting for next week as well. So there was still, there were more call buyers in the August, September, and November, with still put buying in the front month. So I think there's a bias early for, it's a 7-day option. So there's a bias to the downside still on the short term, but still more call buying further out in the curve. So we'll have to see what happens Sunday night and Monday. This was a steady increase this morning. So we were up overnight. We opened even higher, and then we continued to gradually move up. So the market closed, so we don't know where that would continue. So again, it's like we talk about on Fridays. Who was around on Friday? Are people going to come in on Sunday and go, oh boy, I didn't expect us to recover after being down so much? And then that's going to set the tone for how we go out the the early part of next week. But I think we're, without knowing anything more about fundamentals or the technicals, the way this market has moved, it's sort of trending within a range at this point. So that's going to lead to good trade, I think, and just people looking for opportunities to play, a breakout on the upside or a move to the downside through some key technical levels.
Yeah, it has been fascinating to watch. You're right. The futures were sharply down earlier this week. They're kind of recovering some of that again today, but still just the levels of movement out there. For some reason, you aren't attracted by the high levels of volatility out there in the equity markets right now or index markets. You're looking a little bit farther afield than you certainly should be looking at soybeans, as long as you can handle a marketplace that's limit, seems like every other week at this point. But yeah, the fascinating stuff. The soybeans trail continues. We unfortunately have to wrap up pretty soon. Really quickly, so you got Danielle in the chat room saying, is the Brexit thing much ado about nothing? That kind of echoes a sentiment, Nick. We did our long and short of futures options with our friends over the CME yesterday, and one of our guests on that show kind of equated Brexit to Y2K. He thinks it's the next Y2K, where it's really just much ado about nothing in terms of volatility. Which, if you do have that viewpoint, then yeah, this is a fantastic premium harvesting volatility selling opportunity. The market's just kind of teeing it up for you right now, right, Nick?
Yeah, I mean, that's sort of, again, not being an economist or a very astute political guy, other than what I read and actually pay attention to, but it does seem like it's a natural reaction, right? You're going to see the put buyers like that because you're for the tendency of weakness in the currency if something were to happen. But the more I read and the more I see the timing of it all, I mean, we're going to be through potentially to our next presidential election before they would even think of leaving, as a possibility. So I think if people have that sense, there is some trading opportunity there. So I will be surprised if we do much more than we've already done, given where the market's taken it, where it's taken the volatility. Because you have that coin toss. Obviously, they're always going to be pessimistic and go to the put side, I would think, right? There's pessimists outweigh the optimists generally, even if you see that 50-50 vote. But I don't think much is going to happen after the fact, and especially given the more I see and the more I read about nothing happening immediately. Like you said at the beginning of the show, it's not like the 24th comes, that's it, everything changes. There's a lot to be done before anything significant happens.
All right, Mr. Nick, we'll have to leave it there. That music means it's time to bring to a close yet another kind of round the globe episode of This Week in Futures Options. We kicked it off in the realm a little bit more domestic here with FOMC, looking at the Treasuries and the rates. We went a little bit further afield out there into the realm of the euro and the pound to talk about all the impacts of Brexit. And then we brought it back home and actually around the globe yet again, because soybeans are mostly out of Argentina and other regions, to talk about the magical product that are the beans. So it's been an interesting journey. This show is an interesting journey, Nick, because we never know what we're going to get every week, which is kind of the fun of this program. And before we go, I want to mention, of course, again, if you want to check out and follow along with what Nick and I are looking at as we're actually doing the show, the easiest way to do that, cmegroup.com/twio. I know it's not Twifo, it's Twio. We're working on that. TWIO lowercase. You can see all these reports, all completely free. So check it out. See kind of all the cool stuff that Quick Strike is creating for you guys to check out. And Nick, while they're checking out Quick Strike stuff, what do you guys have coming down the pike? What are you guys working on to make the platform even cooler for our listeners?
We're doing some revamping to get a little bit more consistency in the app, and I think that the users will start to like that and see some of the changes we're making a little easier to use, a little easier to, as you like to say, take a deep dive into some of the products. And as I mentioned every week, releasing more good in-depth reports via the CME Group website. So go out there, take a look. Quick Strike Essentials is available for free. And there's about 10 or 12 other tools out there as well where you can get Twio or Twifo style of information as well as other stuff that's going on in the market. So I'm going to tweet out that Eurodollar this weekend options report right now. I just responded to one of Mark's earlier tweets, so take a look at it and see what you think.
All right, Mr. Nick, thank you for that. And on behalf of Nick and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course, for sending in such great questions. I hope we didn't get a chance to get them again today, but we'll get to them soon. And also for streaming live. We love you guys as well. And we'll see you next week right here on This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.